What is up, guys? So I have spent around 200 hours in 3 months of my trading journey, going over YouTube videos, finding different courses, mentors, and I'm going to skip everything, give you the fast track and everything you need to go ahead and just getting started, and the tips that I wish I would have learned back then when I was getting started. So first is I wanted to show you guys this is my data that I've collected so far. I do have to update it. This is only till the 9th of January, but you could see when I started, and I've only traded ES. And then I try to find, what was price action doing, just collecting data is what you should be doing. And I've also recorded every single session that I've done from since I started. This is the January and December one. Um, and then I also have taken notes in every single session that I've done, why I took the trades, what I was doing, etc. Um, there's not much to look into here. It's just overall my thoughts. But even before getting into this, I spent 2 weeks studying this one YouTube channel. This is the out of everything, signal groups don't work, ICT doesn't work, TJR, all those methods, everyone complicates trading and it's overwhelming and it feels like you're never going to figure it out, but it's not the case. And I'm going to break down what exactly you need. So, the way everyone trades is obviously they use price action and they find a way to look at the price. So, no matter if you're using ICT, fair value gap, displacements, retracement, whatever you use, you're always trying to look at price a certain way. So, first thing you should know is no matter if you put to the 1 hour time frame, if you put on the 30-minute, you're always going to see different action on the price. Look, right here is going down, but if you go to the 1 minute, it could be going up. You have to understand none of that matters. RR doesn't matter. Win rate, all that stuff. I'll show you exactly what you need to focus on. So let me go ahead and just take this off. So um, let's break down how this YouTube channel that I studied for 2 weeks, Imantrading, what videos you need to watch from his, which he has about 60 videos on his channel, but let me break down the only 10 videos that you need. So there's one called my final trading guide. So he basically shows you what it's like to be a beginner trader, so you could, be in the mindset of that. This one talks about how his mindset of how he's going to be profitable, how he's going to make money. This right here is single-handedly, this video right here, my strategy I invented that got me from the categorical trading is what I was just breaking down. Um, and this is, I watched this around 12 to 15 times. And this is going to explain to you his strategy that he uses to, he's taking around 30K total payouts from prop firms. He's been doing this for around 2 to 3 years. And it sounds like I'm getting paid to sell his stuff, but he doesn't sell anything. He doesn't sell any courses, any mentorships. And he clearly states that he has a website, but again, he's just providing all the info for free there. Um, and I could break down his strategy, but just to break down his YouTube channel, first of all, um, then he has, going back to the videos, um, he has every strategy that talks about all the strategies that he's looked into and how there's two types of traders. There's a trader where they just look at price action and based in the highest probability move, they go for a quick trade and then they make money on that. That's called discretionary. Systematic is more where I'll kind of break both of them down in a second, but they have different indicators. They have a set of system that if all of the things tick the boxes of, your cap me out in the morning and volatility and price action is at 200K or whatever, then they take a trade. You should be a discretionary combined with a little bit of systematic. There's no algorithm, there's no type of rules you follow, and then you're profitable. The best traders are like a man, where they trade based on market sentiment. just months or years they've put into just looking at the charts. The best type of experience you're gonna get is looking at the charts. Um, you know, at the beginning you want to look at, you know, there's so many ways of learning, but you want to experiment, you want to look at many videos, but the ROI starts to become less as you learn the fundamentals and you kind of just grasp everything. And you should not fall for the paralysis by analysis. This trading does not take 2 to 3 months worth of YouTube videos and just that type of studying to learn. And it's really more like boxing or piano that you learn by doing, but you do need the fundamentals first. That's why this video is coming in handy. But anyways, this one talks about how there's three types of traders. There's break even, there's unprofitable, and there's profitable. Uh, Unprofitable means that you're just following the price action and you're just basically um, falling for what 95% of traders fall for and all the moves. You're basically just not really having intuition or a true, what you're calling edge or a thing around that. Um, so the 3 minute video that he talks about
Here's the last one low or high.
time frames is exactly what I said. Time frames do not freaking matter, but I prefer the 30-second, and I'll break down why. But anyways, then this one, the most in-depth YouTube video. So this is similar to the one where he breaks down the journey. I would recommend just watching both. They're very good. Um, and then ATR is the only indicator this guy uses. So to break down ATR for you guys, and I promise this is super simple. ATR is average true volume range. So just to give you an example, right? When there's low volatility and low volume, this indicator reminds you of that, right? So um, all you have to know is if it's around 1 or 2, that means volatility is low. It does not like help you predict anything. Like if it's high, that means that it's gonna go high, but it gives you an idea of what the candles, what your profit target, what your stop loss it should be set to. So, but you'll see here that around 4 p.m. there's high volatility, right? Um, and then around 9:30 a.m., which is the New York Open, this is when the banks start to put in the volume. All of a sudden, you have ATR all the way up even to 6 or 4 or 5. This indicates that it's really high, and eventually with time you wouldn't even need this, but I still recommend it having. I always have it, but that's all you're gauging. You're just gauging the volatility is a good reminder of it. You look at it, and this can help you, you know, be careful on that. So, um, and then Fibonacci is basically, I can pull it up, but it's essentially a waste of time. I wouldn't even look into it. It just talks about how it, it's used as a confirmation of when it hits a certain percentage. Like there's let's say this is like 76%, 100%, then you got a short or something. It's just I think it's BS. Um, and then there's supply and demand. Supply and demand is pretty good to learn, but it's just foundation, you know. Supply and demand,
At 15. You.
he
Just
gives a specific breakdown of why it happens, what it looks like, but uh, essentially, supply and demand is certain zones, right? So this is you could call it if we were to look at the price, let's say right here, there's a you would call accumulation, right? This is a zone right here with sellers are refusing, where buyers are refusing sellers to really like, you know, let the price go further than that. So this is like you could call it a zone. So Every time the price goes here, you could trade this, right? Because you know it's gonna based on this pattern, right? This is how some traders trade, but I would say just it's good to combine everything, price action plus supply and demand. You don't want to fully depend on this. So it's good to just have a gauge of what you want to do, right? So these are all the YouTube videos that I would watch from his channel. Now, when it came to actually applying it, I have notes on that as well. So he talks about how you should experiment and you should learn if you want to be a directional trader or uh, a consolidation trader. So let me break down a man's price action model and how he trades. Okay. So he uses three time frames, the 30-second, the 40-second, and then the 50-second. Or I think it's the 20-second, I'm not sure. But the reason he does that is if you look at this price action, right? You see how it tells a really good story here. You could kind of see how things are going. If you put this in the 5 minute, you can't really like tell much movement here. But all he's doing when he goes to the 30-second is he's getting a much better story. Now, this does not mean one price action is better than the other, but it's just much more comfortable to see what volume or what price is actually doing. It does not mean you have a better edge or it's worse. People really crap on 30-second time frame, but none of it is worse or better. Again, it just means that um, in it just tells more like all the intricate movements. Now people usually use 30-second or shorter time frames for confirmation, and then what I like to do is use the longer time frames, like the 5 minute or the 15, to build a narrative, right? Um, so, but I'm getting ahead of myself, anyways. So this is how a man would trade. Okay, he would go to this price action, and then he would wait for the New York Open, and then he would look for. First, he would try to identify, okay, is price action consolidating, which this is what a consolidation looks like. Okay, so consolidating it means that is within a box. All right, so as you can see here, this price action is within a box. Okay, so in consolidation, the highest probability move is to short at the top and long at the bottom. Okay, so you get a gauge of the buyers and sellers. If they're starting to fall off, you could place a quick short here, get a quick profit right here, and so on. You don't want to call it hot tops and bottoms, but essentially he really does well in these quick movements. And as you can see, so was I trying to do the same. There's also directional movements in price action, which is when it has this little box right here, right, consolidating until it goes to a new area. With price action, you want to follow the trend. You don't want to short at the top and long at the bottom. You want to follow, go with the trend, right? So if it's going up, you want to long. If it's going down, you want to short. The hard part here is identifying when it's happening because it could look like it's, for example, um, looking retrospectively now, obviously you could tell this is consolidating, but as this price action is forming, let's say you can only see this part right here, you know, it's you can only have a true gauge of this once you've been doing this for a couple months. This is where experience comes in, okay? Um, but you with time, the reason why you collect data and you analyze how you're feeling is you don't want to use this strategy for a week and then give up and then or say like, hey, I'm actually good at this. I know what I'm doing. You want to base all your decisions, all your tweaks, everything on data. So to show you guys, I have collected, oh, it's right here. Ever since I started trading in November 24th. I started with crypto by the way, but then I've been in ES ever since. You want to collect data. Did you use the 30-second time frame? Did you use the 1 minute time frame? You want to stick to as many same variables as possible. Let's say that like I start on the same session every time. I still, I could do up to 9, even 32 trades on a session. ATR kind of stays the same. I stay with the same time frame, but try, I'm not gonna say like what you should do in terms of limitation and not limiting, but you just have to gauge it yourself. Some people like trading for only 20 minutes and then they're done with the session. Some people like trading for up to 2 hours. What you want to do is you want to just give yourself freedom to experiment and just go with an open mindset and just say, hey, this is what I'm gonna do, um, and not judge yourself yet. You need data. Okay, so once you have that data, then you can become a directional trader where you only trade what there's specific conditions and price action, or you could become um, a consolidation trader where, as in mine, now he's at a point where with prop firms, he has what's called a system. He has rules and reminders that he looks at and he abides by them. Okay. So he goes with instructions into a session and he has to follow them. If he doesn't follow them, um, that's bad. So I haven't even talked about the psychology part of trading and when he talks about the psychology. Um, but there's a thing called cognitive dissonance where the more you lose, the more attached you are to a trade and the harder it is to let go of that trade. So um, he is very good if you want to learn about psychology as well, but this is a must for fundamentals. Now, since I want to cover everything in this video, it feels like I've been yapping. This is where the fun part begins. Let's say you have the basics, okay? Now it's time to do a combination of things. So, the other YouTube channel that you need to be very careful of, but just watch this one video, is this
Thank
guy.
you.
So, um, when it comes to this guy, his name is Fabio, and he um he's the number one scalper. This video right here, I've watched about 5 to 7 times, and I'm going to give you a breakdown of his strategy. So first, he uses the 5 minute and the 1 minute time frame. That's the only difference in time frames. Okay, first of all. So he is a price action trader, but uses also order flow, which is I'll go ahead and show you guys. I don't I tried it, I can't, but this is what he uses. Or wait, it's orbs. Um, so he uses what's called this. Oh shit, that's not it. Shoot. Um, Let me take this off. Hold up, how do I pause this? Fuck. I need to pause. Dude, you telling me I can't pause this video? Oh, fuck it. Okay, okay. So this is how it works. All right. I don't know why they're not popping up, but essentially, you go to the 5 minute time frame. Oh, there we go. Okay. You go to the 5 minute time frame and you need to look at auction market theory. So market theory is called AMT, which is there's only two ways that the market behaves, which is out of balance and then within balance. So let me disable this. This is a bit overwhelming. Bubbles. Um, let's see here. Okay, so auction market theory is when the market is um, balanced in the sense that, as you can see here, why is this shit not moving? Oh my fucking God. Where the market is staying within one area. All right. So no matter where it goes, it comes back. Okay. And the way he explains this, okay, this is hella annoying. I can't get this now. Nice. The way he explains auction market theory is he uses volume profile. Now, if you just, you're not gonna find it here on the indicators, but if you go to click here on NinjaTrader for the community indicators and you look up Seth, this guy has the bubbles and also this one, which is the price axis volume delta, which the way that I like to do it is, let's say I want to trade this before the New York session. I go to the 5 minute time frame and I mark out the volume profile, right? This tells you where majority of the buyers and sellers are at, right? So this is the location. This, if you're, let's say, a seller, as soon as you're getting to this part, the price is cheap. It could either be cheap or expensive. You're finding basically in what area of the chart are buyers or sellers being in pain, like, or being like really well off, right? So if price is giving this type of structure, it means that it's balanced, right? Shoot, right? But as soon as you could tell, as soon as it goes here, you see how there's still low volume here, low volume here. This is called a low volume node. This is a high volume node. So when you're trading, let's say you start the New York session, okay, and you want to use this method. You go to the price axis. You get a, you put it on the previous data, and then you find two areas, which this is where volume is the lowest. So you know that if price is hits this, buyers are going to get aggressive, you know, or they're going to get. It feels like I'm losing brain cells explaining this. Fuck. But buyers or sellers are going to get aggressive at this point because this is a low, there's not a lot of volume here, so it's cheap, it's low traffic. So if they're not getting aggressive, that means that they want to stay within this area. So what I used to do is I used to be like, okay, let me wait until it hits this area, and then it means that it's going to break it, but not necessarily. If it hits this area and it doesn't break, that means that the market is being balanced. If the market is being balanced, it's consolidating. If it's consolidating, you don't want to play for a breakout. You want to play for a consolidation. And this is exactly what I did. Now, what I would do is I would gauge, okay, this is where the low volume node is, right? Which is LVN. So even you could check in this lower time frame. Boom. Let's say even here, right? If price goes here and it goes up again, that means that now you have an area where majority of buyers and sellers are trading. Okay. So now if price goes down again, and then this area, there's not a lot of aggression, there's sellers are getting stopped out, that more than likely means that there's going to be an upswing, right? And this is where supply and demand comes a hand because that kind of rhymed. As you can see here, this is a POC, a previous area of contact, a previous point of contact, sorry, that that when it comes to this area, you can see that price is it's not budging. So obviously you're gonna put along here, and you're putting along here on the failed sellers. You're just gauging the action within price. So he talks about this is where you would put the location of the trades, and then you want to find who's more aggressive. Is it the buyers? Is it sellers? Then um, there's previous points of contact. He talks about ATR and he says that what ruins your win rate is not risk to reward, is going past the ATR, which is trying to play by volatility the wrong way. Um, and he has two models. One is mean reversion, which is you. This is more for London session, or when it's consolidating or compressing, it could work as well. But basically, let's say that this is the price action. Majority of the volume is here. Price goes outside. Let me take this off. Price goes outside, and you see that it's not going past this area. This would be a good point for a short, as I took here. See? You put your stop loss here behind the biggest sell, and then this is a very high probability trade. And this whole all happens within the 30-second time frame. Now a different scenario that I traded as well is, let's say it's been on this area, it's been going up, it's been going down, consolidating. Then you play for a breakout. So once it goes to this area, I saw that the market, I thought it would go to the previous day low, which is around down there, but it didn't. So I just decided that it would go up. Um, I don't know if I'm making much sense. I'm still gonna post this, but then there's cumulative data. Delta, sorry. This tells you the actual aggression in the volume of the buyers and the sellers. Now, this just tells you the volume. This tells you the intent. If you're seeing that, you know, let's say that, to use an example, that price is going down, but you don't see a lot of sellers here on the cumulative data delta, it's basically you know that this is more than likely a fake out, and you're not seeing a lot of sellers here, you're not seeing a lot of sellers. So there's not a lot of restraint here for buyers to just come in and be aggressive. So that's where they come in, they're aggressive, and boom, that's a trade right there I took for like 500. So 72, 84. Um, And then that's it. I will show you on the live trading sessions, still on a demo, but that's what it looks like. I don't know. This is the recap. My goal for the next 3 months is to continue implementing this. I'm not gonna do the bubbles. I'm just gonna do it on price action, and but I'm still gonna follow the models, and I'm still gonna follow Imant's strategy, which is based on high probability trades. But overall, that's what it looks like. So that's the YouTube video, and that's pretty much it.